my God. Oh, my God. I'm back with another one. We're going to continue this where we left off. It is Shiv Verma's time to speak. If you are just now joining me, I'm the Blacksmith, will be, and I will be going through this Robinhood Q1 earnings call for 2026. This is the money man about to speak, the bald guy. Shiv Verma is the CFO. A lot of people heard of CEO. That's the guy on the left with all the hair. That is the Chief Executive Officer of Robinhood. And on the right is Shiv Verma. He is the CFO, the Chief Financial Officer. Let's go.
Right. Shiv. Thank you, Vlad. So before we get started in financials, I wanted to share three big takeaways from the Q1. First, as Vlad mentioned, our product velocity continues to accelerate. So we're investing for the long term, we're aggressively leveraging AI across the business, and this is leading products being shipped faster than ever. Second, we delivered another strong quarter of 20% annualized net deposit growth. As a reminder, this is our North Star KPI. It's great to see customers continue to trust us with their assets. Even with the macro backdrop, which was more challenging to start the year, customers remain engaged, they deposit on the platform, and they're rapidly adopting our new products, banking as example, as Vlad mentioned. So all this put together, it led to 15% year-over-year revenue growth and 50% adjusted EBITDA margins. And third, big takeaway is Q2 is off to a good start in April. So
let's go.
Trading volumes for equities and options are on track to be our highest month of the year.
Let's go.
Actually, our second highest month in history. Net deposits, they're already approximately $5 billion month to date. That's great to see. And retirement assets just crossed $30 billion. So really great to see customers continuing to invest for the long term on Robinhood. So let's go to the Q1 results, and all of this is compared to a year ago. So first, revenues grew 15% to 1.07 billion, and this was driven by growth across the entire business. So transaction volumes, they increased with growth in equities and options, and we had a record quarter for both prediction markets and futures. If you look at interest earning assets, they also continue to grow, and they more than offset the lower short-term interest rates. So really great to see net interest margin grow as well. And then other revenues were up as gold subscribers reached a new all-time high, 4.3 million subscribers. So really great to see the adoption there. And we also continue to stay disciplined on our costs. So we managed Q1 expenses to be significantly lower than our outlook. So adjusted OpEx and SBC was 607 million. And this included 14 million of costs related to Rother and Trump accounts that actually were not included in our outlook. So I looked ahead to the rest of the year. We expect to invest an incremental $100 million into building Trump accounts, with approximately half of these in Q2 as we prepare to launch. As Vlad said, we're super excited for this. So these costs include building an exceptional user experience and actually a brand new app, also ensuring we have best-in-class customer service, and then giving customers access to really great educational content. Importantly, I would also note that our work for Trump accounts is contracted on a cost-plus basis with a small margin. So we expect revenues to exceed costs for this project. So given this $100 million investment in building Trump accounts, we are raising our full year 2026 outlook for adjusted OpEx and SBC by equivalent 100 million, and so our updated range is 2.7 to 2.825 billion.
Talk that money.
So turning to capital allocation, we spent a lot of time here. We've also leaned in on share repurchases to start the year. So far this year, we've already repurchased over 300 million or 4 million of our shares, which keeps share count on track to be approximately flat this quarter. And as we've said before, the denominator matters. Additionally, in March, our board refreshed our share repurchase authorization.
Sorry, I'm picking out ingrown hairs. There's a trouble area over here. This is why I can't shave. I just stopped the video just to say something crazy.
To 1.5 billion. So this reflects the great confidence and opportunities we have ahead. So looking ahead, just want to share a few top of minds that we're also thinking about. First, we're going to continue investing for the long term while maintaining our disciplined approach to cost. So customers are responding incredibly well to our new products, and our product velocity, as we said, is faster than ever. We believe this combination can deliver outsized growth for years to come. But at the same time, we want to remain disciplined in the way we invest capital. And so we're continuing to underwrite each investment to strong long-term ROIs. Second, we are also increasing our focus on top of funnel customer growth. So this is something new again. While we continue to add customers organically, we think there is an opportunity to improve our customer growth rate. both in the US and internationally. So we're starting to allocate more of our investments and capital to adding new customers again, while still maintaining our focus on the strong annualized net deposit growth. And this is all in addition to supporting Trump accounts, which also puts the Robinhood technology in front of the next generation of investors. And third, we're leaning into investments in AI, both in the customer-facing products and internally. So Vlad spoke to a lot of the customer efforts, but we also believe making AI native to our workflows is just as fundamental to winning. So last quarter, if you remember, we shared the 9-figure efficiency benefits we've already generated in engineering and customer support.
Let's go.
But we are now giving every team the tools and mandate to adopt AI into their daily workflows. To drive productivity while also making the experience of working at Robinhood even better.
Did you hear that? They are making all of their teams, i.e. the employees, make up the team. So they're making everyone utilize AI. Listen, let me tell you something. If you are not finding a way to utilize AI every single day, you're wrong. And if you don't think so, you think I'm wrong? Okay, I'll be wrong. I'll let you be right. But if your goal is not to be left behind with the new it thing of your generation, then you are wrong. Because if your goal is not to be left behind, you will be left behind by not utilizing AI. Find 3 things to ask AI every day. That's just the first step. Then find some way in your everyday life to embed AI.
Today, over 90% of our employees are already using AI tooling in their workflows. It's great to see. These adoption numbers, they continue to increase weekly. Another example of a data point we watch is commits per engineer. This measures how much code our engineers are successfully deploying into production. It hit a new high in Q1, and it's up 50% since the start of last year.
Let's go.
As our engineers are leveraging these AI tools to build even faster for customers. So we believe AI has the power to transform financial services for both customers and employees. And as a technology company, we plan to lead that charge.
Let's go.
So putting it all together, we believe the opportunities for 2026 and beyond remain massive. Our teams are hard at work. They're shipping great products for customers, but we're also staying lean and disciplined to generate operating leverage for shareholders. And as I said last quarter, our financial North Star remains the same. Maximize earnings per share and free cash flow per share for shareholders over time. So with that, Chris, why don't we go to Q&A?
Q&A. Let me go ahead. See, Shiv's part is very quick. He gives the money and he's on. Vlad, being the CEO, he has more of a responsibility to talk about all of the products and all of the rollouts and all of the things that's coming. They both do their job and it works. I miss Jason Warnick, but Shiv is a new addition. Jason spoke more than Shiv. Shiv seems like he's naturally quiet. That's just his personality. There's nothing wrong with that, Shiv. We love you, dog. Let's go to Q&A. Now I'm time back.
All right. Thank you, Shiv. For the Q&A session, we'll start by answering shareholder questions from Say Technology. And after the Say questions, we'll turn to live questions from our audience. And then we'll go to dial-in participants. So the first question from Say comes from Sebastian G, who's joining us live via Zoom.
Sebastian.
Hey, good afternoon. Good afternoon, everyone. Thank you, Vlad and Shiv, and
Such
thank
an
you to
honor.
the Robinhood team for the opportunity. Thank you for everything you guys do. My question is around the dividend tracker that you had previously announced. Can you give me an update on the current status of that?
We love our dividend investors at Rob.
All right, hold up now. Before he answers that, look at this question right here. Our own trauma. OpenAI is planning on doing an IPO. Is Robinhood going to list OpenAI or just have it in the private fund then? I think they mean RVI. That is a question I would love it if they answered. I'm going to stand by on that. I could barely see it at the bottom, so I had to go after that. But I'm wondering on that too. Some of those questions on the Q&A portion, questions they might ask were kind of idiotic. But a lot of those questions were very good. Let's hear what he's saying. Come on.
Robinhood. We call them dividend hounds. You're a dividend hound, Sebastian.
I am.
You
I
can
sure
live
am.
off of dividends.
The short answer to your question is it's in the works, and we're going to be launching it this year. So on
Ooh!
track for that. The reason it hasn't been launched already is that as we sat down with our team to think about what we could be doing even more for our dividend hounds, one thing came up. So a lot of them had this complaint that some of the other brokerages pay out their dividends in the morning, but we do it in the evening. So why can't we pay out the dividends a little bit earlier, match everyone else? So we looked into this, and what we discovered was that actually the dividend record date is up to 2 to 3 weeks before the dividends are paid out typically. And so we saw an opportunity not just to match what everyone else is doing, but to beat it and to give your dividends an average of 17 days or 2 to 3 weeks earlier.
Ooh.
And this is like
See what I mean?
real value. So one
See
of
what
the
I
other
mean?
reasons why hopefully it'll be irrational to use another brokerage for your dividend investing than Robinhood. So we got excited about this. We're shipping that.
Taking
That's the
market
live
share.
preview this month, and now our team is turning their attention to making what at this point, given all the questions, needs to be the world's best dividend tracker. So stay tuned for that and enjoy the early dividends in the meantime.
Looking forward to it. Thank you.
That's what I'm talking
All
about.
right. The next say question is from Matt S.
Vlad, what's up?
Hello.
Hey, what's
How
going
you
on?
doing?
How are you?
Oh, there he
Excited to
is.
be here. Really appreciate it. Okay, so my top voted question was
He's always
will
asking questions.
Robinhood have IPO access to any of the upcoming mega offerings?
Okay, yeah, that's a great question.
Now he was actually one on the list, Matt S. He asked that question in the Q&A. If you look at the app or you go on your desktop and look at the questions, he asked that in there, and I was looking for that one to be answered. Let's go, Matt.
So I have to preface it by saying I can't really
Divulge.
be specific with you about what IPOs may or may not be on the platform listed before you actually see it.
Legally, he
That
can't
being
say.
said, in the past couple of years, we've seen a distinct shift where pretty much every major IPO of consequence has been on Robinhood's platform. And in most of these cases, the founders, the CEOs are engaging with us directly, asking for help with their retail strategy. And there's a big change from when we launched IPO Access, which was back in 2021.
That's right.
We really had to claw and scratch and ask for favors to get retail these allocations, and everyone was telling them
They launched IPOs in 2021, but that's actually when this company went public. Okay.
you don't want retail in your IPOs, certainly don't want more than 10% retail allocation. And now we're starting to get the CEOs talking about how they're actually driving larger and larger historic sized allocations, 20%, 30%. We're starting to get questions about how big is too big. Why isn't anyone doing larger? And I think that's awesome. I think we've helped really change the game, and now retail has.
Stop right there. He is exactly right. I got to pause this because if I let him say it all, I'm going to forget. So sorry for pausing it, but listen what he's saying. They changed the game, and they did. So did you hear what he said? I said this in the first part of this video. By the way, if you didn't see the first part, you missed it. I'm going to put part 1, part 2, part 3 or whatever. But what he's saying is they changed the game. They did. Because again, the whole accredited investor with $1 million net worth earning $200,000 or $300,000 a year for 3 years, or for 2 years, be on pace to earn it the third year. Listen, they allowed you to invest in IPO, so he can't divulge what is going to IPO, but he's trying to guarantee you they're not going to miss the boat on anything big by telling you all of the major IPOs have IPO'd on Robinhood before. The best indicator of where somebody is headed is looking at where they've already been and mapping the trajectory based on that.
Has a real seat at the table in IPOs, and with Robinhood Ventures, we're driving that even earlier. So I think that's a durable trend. I think it's going to continue, And so you should expect that that'll happen in the future, and we're going to continue to work tirelessly to get the highest quality IPOs and private companies to treat retail as a first class constituency.
So what he's saying there, when they say retail, they mean your common everyday man. They can't say it like that. Retail is the nice way of saying your average man, right? The average man cannot invest in private companies, right? But what he's saying there is if you're asking about OpenAI, if you're asking about SpaceX, if you're asking about Neuralink, if you're asking about Starlink, if you're asking about Adderall, right? He cannot specifically say that they're going to IPO on Robinhood because the company might not want people to know when they're going public. So if he tells you yes, then you know they're about to go public. That changes things because some of their early investors might be selling, they might get nervous or whatever, right? He can't divulge that, but he's trying to tell you, we got this. That's basically what he said.
All right, thank you, Vlad. That concludes our shareholder questions from Say Technologies.
Oh my God.
Now we'll move to Q&A from folks here live in Menlo Park. So the first question goes to Alex Margraf.
So live
Thanks,
questions.
Hey guys. Alex Marcraft from KeyBank. Maybe a couple questions, Vlad. Just one on Shiv's comment on customer growth.
Well, audience
Trump
question.
account. Efforts obviously one source, but as you think about other sources of customer growth when you're putting some more capital behind it, where does your mind go?
Yeah, I mean, I think that there's a lot that we could be doing both on the product side, just making onboarding simpler, getting customers to see the value easier, right? And I think a lot of those surfaces, since we've in the past few years turned our attention more to deepening relationships with customers, getting higher value customers to get more value. We've been spending a little bit less attention and focus on how to make the top of funnel simpler and easier to get through. And in particular, now we have lots of products, right? So there's lots of things to market, lots of things we can put in front of customers. We really have executed on this vision of building a comprehensive financial services platform. So the challenge now is how do we kind of like organize these things for customers and make them so that we deliver the thing that you're looking for as quickly as possible, not to kind of like clutter the interface and experience. And I think we're also seeing really good impact from our marketing activities. Marketing continues to be very high ROI for us, and that just gives us more and more levers.
Right. Maybe, Shiv, on OpEx, last quarter we talked about the profitable growth framework. As you think about the flexibility that showed up in the first quarter around the 607 million, when you look at the rest of the year, maybe help us think about where the flexibility exists to, on the lower side, if need be, to ensure that profitable growth framework.
Yeah, great question. So our North Star is still the same.
All right, I'm sorry. Did y'all see the comments? Gotta have a kid soon to get that Trump account. The return on investment is going to be a little lopsided on that one, buddy.
We want to drive free cash flow per share and earnings per share over the long term. So that means we need to be making investments. So
that's right.
We want to keep doing that. Customers responding incredibly well. At the same time, we want to be disciplined. And so we're constantly re-underwriting everything we're doing, making sure it still makes sense and where we want to put our capital. 85 to 90% of our costs are fixed, but a large portion are discretionary. So as a software platform, we're constantly looking at what's the right allocation of resources internally. We also have marketing spend, as Vlad mentioned. We also have some variable costs, even though predominantly fixed. So I feel really good about our outlook. We're still building for the long term. We came in better this quarter, and we're continuing to monitor it. But I want us to be investing for the long term, and then if we need to, we also have some levers we can pull.
They also have
Thank
money.
you,
They're
Alex.
not a company that's in
Alex just
debt,
had a
I
second
believe.
child, so we let him have 2 questions. But for the next, for the remainder of the question askers, please limit yourself to 1 question. All right.
They
so
let
next
him do
question
it.
is from Dan Fannon.
I'd ask too.
Thanks, Dan Fannon from Jefferies. So wanted to just talk more broadly about the health of your customer base, given and the resiliency, given all the market volatility we've seen to start the year. And then you gave some comments about April, only mentioned a few asset classes. Maybe expand a bit upon outside of just options and equities, maybe crypto, prediction markets, sec lending, any of the other kind of areas where you're seeing any change in behavior as you go into 2Q versus what we saw in the first quarter?
Yeah, I'm happy to start.
Go for it.
So our North Star KPI is just net deposits. Like that is our customers healthy or they're trusting us. 18 billion in Q1, despite was a really tough macro backdrop. If you recall, to start the year, there was a government shutdown, a software sell-off, and then a global conflict. Despite all of that, our customers remained resilient. I think the big difference from a couple years ago is one, we're a lot more diversified. So there's a lot of different products that customers were using. We mentioned banking, for example, Robinhood credit card. We also have Robinhood Strategies. That's our robo-like product that has over $1.5 billion. And so regardless of the macro backdrop, customers are using that. The second thing is we have more active trader tools. So we now have index options, which allows you to go long or short. We also have shorting, which is growing nicely. So for more active traders, they're continuing to remain engaged. And your question on April specifically, really healthy volumes across equities and options, as I mentioned. Prediction markets, it's on track to be around 3 billion and probably our second highest month ever. So really strong engagement there. So everything we're seeing is the customer is healthy, they're engaged, a little bit more activity from the active trader constituency, but the thesis was if you build great products, if you diversify, if you give active traders the tools, they'll be there throughout the cycle, and that's what we've seen thus far.
Perfect answer, actually.
Great. Thank you.
I guess Vlad didn't
Any
have
other
anything to
questions?
add.
Jeff John Roberts.
So he basically said with the government shutdown, with this Iran crisis or people calling it a war, conflict, whatever you want to say, with inflation going, with gas prices going, he said the customer base remains strong.
Hey, Jeff.
Hey, Vlad. Nice having. My question's on prediction markets. How does Robinhood see this industry evolving? Do you see in 2 years it being like a Uber Lyft type duopoly, or is there going to be like 5 or 10 or 15 players?
Yeah, I mean, remember, prediction markets happens at various layers, right? So right now we're kind of think of us as a brokerage, and then there's a variety of exchanges, and you know, there's sort of the main ones that are in the news, and also a lot of the other players are growing their own exchanges, building their own, going through the CFTC registration process. There's probably been over a dozen, probably more than that. So I think we should expect to see some consolidation because, frankly, if you look at all these dozens of new exchanges that are popping up, there's not a lot of differentiation. And I think differentiation really comes down to who has an established, engaged customer base and who has a unique advantage with economics. And one of the things I think we're unique with is we've got 27 million funded accounts in the US. And through our partnership with SIG to launch Rothera, which is one of the leading market makers in the asset class, we believe that we not only have an advantage with retail, but also institutional as well. So I think the asset class is going to continue to grow. We're very, very early. We're starting to see the beginnings of diversification outside of sports. So that's been increasing.
That's right.
I do think,
the first thing was the election.
Exact timing. I don't believe there will be dozens of DCMs in the future. I think there will be some consolidation, and I think we should see that shaking out in the next couple of years.
So you have to keep sports. Sports is like driving a lot of the revenue. You have to keep sports.
Here who would like in person to ask a question?
Don't be shy.
Be shy. No, don't be shy. And honestly, why would you come to this event and not have a question to ask? That's just crazy, man. If I went there, I'm asking my whole Discord.
Please raise your hand.
What questions are we
let us
asking?
know that you'd like to ask a question. So I'm seeing the first question is coming from Devin Ryan.
Wasted opportunity. Wasted.
Hey, Vlad. Hey, Shiv. How are you?
Hey, Devin. Doing well, thanks.
Good to see you. Question, want to dig in on the recent announcement on the pattern day trader elimination and just get your thoughts on what does that mean for Robinhood, for your customers, for kind of modernization and democratization kind of near term? And then, bigger picture, how do you see this playing into, I don't know, themes like agentic trading and maybe the ability for customers to trade a lot more than maybe they otherwise would have been able to do. So just love some thoughts on kind of both near term and longer term what this means for you.
Yeah, I think it's fantastic.
That's a
I
man
mean,
that came prepared.
this rule. So for those of you that aren't familiar, probably most are, but pattern day trading rules prevent day trading effectively for customers that have under $25,000 in their
Yes.
account. So when I say vestigial and kind of
Yes, it
outdated, it's
does.
this old notion
I was
that
once one of them.
the amount of money you have in your account balance dictates how sophisticated or knowledgeable you are, right? And we've seen that maybe in the past when we had lack of good information, this was kind of a reasonable proxy, but now we have tons of information, so it makes less sense. Moreover, the way this rule works is if you fall backwards and trip over and become flagged a pattern day trader, effectively, if you want to trade, you would have to churn out of your Robinhood account and go to another brokerage. So it wasn't even, this follows you around as a customer. It's just on a per brokerage basis. And since we were getting the lion's share of new customers, we felt like this disproportionately affected us. So excited to see it go. This, along with the accreditation rules, are kind of like vestigial rules that tie sophistication with account balance, which we think is wrong. And we're excited that there's progress there. And obviously, as you can tell, we're ready to go. The team is excited to go live with the new logic, and I think it's a great step by FINRA to push this through.
Awesome.
All right. Thank you,
Awesome.
Vlad. The next question is from Dan Dolov from Mizuho.
Hey guys, hey Vlad, hey Shiv. Looks like you're in a much better place than I am.
Is that why you're not on video?
We're I'm in New York.
Enough said. Enough said. He's in New York. He's snowed in. That's why. Do you see this question down here? How you get in on Robinhood Social? So when I picked my phone up I guess it was a couple minutes ago. It might have even been in the first video. I recorded them back to back. I was trying to figure that out, but they probably have to invite you like they did the Robinhood banking.
So great stuff here. Everything sounds, really amazing and promising. I was very impressed by the Agentic Trading commentary. Maybe can you educate us a little bit what you guys are doing? Because if anyone's at the forefront of Agentic Trading, it is probably going to be Robinhood. So I'm really curious to know, what you guys are doing there.
Yeah,
I'm sure a lot of people would like to hear that as well.
You caught that in my prepared remarks, right? My preference really isn't to reveal too much
Exactly
about products before we ship them, but we've got a lot planned this year. I mean,
he never does that. Never does.
I just announced. So we're going to be launching some stuff in May. Then we've got the crypto event in early July. And then we have Hood Summit. That's going to be our active trader event, third annual in the fall. And I just reviewed kind of the docket for that. You can imagine AI agents and putting the best financial intelligence in our customers' hands is going to be a starting player in the starting five of most, if not all, of those events. So, and I should say, there's been a lot of noise about this by the industry. I don't think anyone's kind of figured anything out yet. So we're still early, and you should expect us to be not just early, but kind of at the forefront there.
All right, folks, that's all the questions we're going to do. We're going to wrap this video up for today. But hey, listen, I'm going to tell you something. If this CEO, Vladimir Tenev, is ever nebulous about something, it's because he cannot divulge legally. Or another thing I've noticed he does, because I've covered several of their calls, is he undersells, over delivers. And that's Robinhood's brand. I'm not sponsored yet, Robinhood, wink, 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 but I will be sponsored one of these days. All right, folks, Forge Going Cold, thank you. I love you. I appreciate it. Like, share, subscribe, hype up the video. And I will see you in the next one.